In today's video, we're going to discuss Schedule B, also known as interest and ordinary dividends. If you are a U.S. taxpayer, make sure you watch this video for important information that could save you money and show you how to report your taxes correctly. Hi, I'm Patrick Evans, founder of U.S. Tax Practice. I'm a U.S. certified public accountant based in Switzerland, servicing U.S. taxpayers here and in the rest of Europe. And I'm in the business of helping fellow U.S. taxpayers with their U.S. tax preparation, compliance, foreign bank reporting, and expatriation. Okay, let's get started. What is the purpose of Schedule B? Schedule B reports the interest and dividend income you receive during the tax year. It is also used to indicate if you own a foreign account. However, you don't need to attach a Schedule B every year you earn interest or dividends. It is only required when the total exceeds certain thresholds or you have a foreign financial account. In 2016, for example, a Schedule B is only necessary when you receive more than $1,500 of taxable interest or dividends, or have an interest or signature authority over a foreign financial account. This is really confusing because many people aren't including Schedule B if they don't have interest or dividends, but it still must be included to indicate if you have a foreign account. That's very important. What is taxable interest income? This includes the interest you earn in a bank savings account or from corporate bonds you invest in. However, if you earn interest on a Series I or EE savings bonds issued after 1989 or from certain municipal bonds, you can exclude this income from your tax return and Schedule B. Generally, the bank or entity paying the interest will report the taxable interest to you on a Form 1099 INT. You can use this information to determine whether you need to complete Schedule B. And if so, your 1099 provides all the essential information you need to fill it out. Now, one thing, if you have a foreign bank account, they're not going to report it on a 1099. You'll have to take that from your year-end bank statement or whatever information you have to complete that information. What are ordinary dividends? Ordinary dividends are distributions of property that a corporation pays to shareholders when it is profitable. Not every stock you own will pay dividends, but if it does, that income is also taxable. For the typical investor, a dividend is usually a cash payment. When your annual dividends exceed the IRS reporting threshold, then you must report them on Schedule B. In addition to the amount of dividends you receive, you must also provide the name of each company that is paying it. Each corporation that sends you a dividend payment will also report your annual total on a Form 1099 Div. Your 1099 Div form provides sufficient information for you to prepare Schedule B. What is a foreign account? If you have a financial interest in or signature authority over a foreign financial account, including a bank account, brokerage account, mutual fund, trust, or other type of foreign financial account, you must indicate that here, and you may be required to file a foreign bank account report. You can also see my video on FBAR reporting to learn more. Okay, so let's review the form in detail. It's super easy, maybe one of the easiest IRS forms there are. Part 1 is interest, and where you will report any interest payments received during the year with the name of each payer and the amount separately. Excludable interest on Series I or EE savings bond issued after 1989 should be included on line 3, and you should attach Form 8815. Taxable interest will be transferred to line 8A of Form 1040, and tax-exempt interest will be transferred to line 8B. Part 2 is for ordinary dividends, and where you will report ordinary dividends with the name, each payer, and the amount separately. The total will then be transferred to Form 1040, line 9A. Qualified dividends are entitled to special lower tax rates and must meet special requirements. These will be reported on line 9B of Form 1040, and you will need to use the qualified dividends and capital gain tax worksheet found in the instructions for Form 1040 to calculate the tax on qualified dividends at the preferred tax rates. Part 3 is extremely important and often overlooked. Even if you don't have any interest or dividends received during the year, but you have a foreign financial account, you need to indicate that here and include the name of foreign country or countries. If you don't have enough room to write the countries, include a separate statement with the names of the countries, and also make sure to file an FBAR if necessary. Remember, that's very important and something that has been overlooked in the past by many taxpayers. And that was it for Schedule B. If you have any questions or need anything, just let me know. Give us a call and I'll be glad to help you. As always, you can find more information on U.S. tax compliance and tax preparation on our website at www.ustaxpractice.com. But if you have a more specific question on U.S. tax compliance, just get in touch. Give me a call on country code 41 followed by 52 533-4581, And don't forget to subscribe to our YouTube channel for more U.S. tax updates and tips. You can also find us on social media, Facebook, Twitter, Google+, and LinkedIn. And we send out newsletters too, so make sure you sign up. I'm Patrick Evans with U.S. Tax Practice. Thank you for watching and see you in my next video.